Hey everyone, hope you're having a good day. My name's Andy. My channel is Finding Value. Today we're gonna rip through Twitter, see what people are sharing on social media. I'll interject my financial opinions as we go through it, generally related to three different topics: wealth building, commodities, and/or financial topics. So let's dive in, take a look, and see what people are sharing. If you want to follow me at Finance, and if you want to join our community, finding-value.com. We have a special going on. Check it out in the description link below. And we also have a Sunday question and answer session coming up where I'm going to dive through company valuations and talk about cycles and those valuations and the typical long-term return of companies that are non-commodity companies and then also commodity companies and precious metals, all that stuff. So we've got Tin here, the guy named Tin. It says gold, a rising ascending wedge breakout. One of the most bullish breakouts one could wish for. You never sell a breakout like this on any short-term corrections. You use those corrections to add with conviction. Gold is going magnitudes higher. And we are going to talk a little bit about the problems of people obtaining gold from the LBMA and stuff like that. And what I'm going to make as a comment is, I don't know if this is the beginning, but if this continues and they continue to have problems obtaining physical metals on the LBMA exchange, and it may even transfer to other exchanges, it could be the beginning of unobtainium. What is unobtainium? Unobtainium is when you can't obtain something. It becomes unobtainium. So is this the beginning stages of gold and silver and platinum and palladium to be unobtainium, and why? I don't think tariffs, I don't think any of that has any sort of reason behind this move. I think it's I think it's because we are at the beginning of a cycle where gold starts to come into favor. And since we're at the beginning, this is what it feels like. This is what it smells like. This is what it feels like. Everyone is so attracted to we'll call it the financial assets in the world, the intangible assets, that we are going to get a shift from intangible assets back into hard assets. And this is what the beginning of that looks like. I think that some of these governments know that they can't stop the move. And since they can't stop the move, they're reacting to it. So there's going to be a lot of news that comes out that is probably just made up. And what, in my opinion, they are reacting to what is occurring. They're not driving it. There's a much deeper cycle. There's multiple cycles that are driving this. And I think we're at the end of the intangible financial asset cycle. I'm not saying that it will drop immediately, but it's going to take time for all this to cycle through. And we're at the beginning of this cycle, the unobtainium cycle that is about to come, where people are going to struggle to get physical hard assets. And why are they going to struggle? Because they've printed so much money. It's in so much crap in the financial assets that when that unwinds, there's nowhere near the amount of physical things at the prices that we are at today to absorb that amount of money. I call it unobtainium. The best way to minimize risk is to think, says Warren Buffett. Here's Thomas. Chart of the week, inflation resurgence. That's also why gold is going higher. It's all part of the cycle, guys. You need to become very familiar with inflation resurgence risk very soon. Something very interesting is happening in the macro world right now. Central banks have undertaken a mass migration from hiking rates to cutting rates. Normally, this type of policy pivot would only be seen as a panic response to recession, crisis, and downturns. And to be fair, there are some weak spots out there, but there's no crisis. There's no full-blown recession. and asset markets are charging higher. Inflation has come down. There is that. So you can argue that this pivot makes sense from the standpoint of pulling back on previous panic tightening. But here's the problem. Disinflation is done. Global median inflation rates have stabilized and some measures of inflation have begun to turn up again. And yet the rate cuts continue, with more central banks joining the movement, Australia and India commencing cuts this month. That brings us to the chart below. Let's go to the chart below. I'm not going to read all this. This is a lot. So this is global monetary policy and pricing pressures. If we look, whenever this turns higher, so look at the red. This is net number central banks. Last move was a rate cut 15-month lead. And then on the global PMI, which is your producer prices, it's an index. So prices sub-index composite will follow that move. Now we've cut substantially here for central banks. And generally what comes behind it is the PMI prices. And we're getting close to it. So we've been consolidating here in PMI, and I think we're going to turn higher here, which we're in the motion of, and break out some of these horizontal resistance lines. So inflation is coming. And gold is front running that move. Gold is pricing in this red era, the red number of central banks. And then when you get inflation, if they continue to cut rates, gold's just going to be a rocket ship. There's going to be a lag behind gold moving and oil moving and all the other ones. So what's going to come next is you're going to see fertilizers, oil, copper, platinum, maybe palladium. I don't know about palladium, but platinum for sure. The inflation sensitive assets are all going to start to break and move. This is your leading indicator, which is gold and this red central banks cutting. AJ Huber says, just announced, good Wednesday, President Trump and Elon Musk are proposing a $5,000 Doge dividend check for all Americans funded by savings from the Department of Government Efficiency. Doge refund. By the way, no more money for Ukraine. Interesting. So are we going to get some check? I mean, this is going to be highly inflationary if they're cutting rates and sending money to everyone. I don't know. I don't know how true this is. I don't know how serious they are about sending this $5,000 check out, but let's see it. Let's see it happen. Something unusual is going on here. The BDI very contracted while Dow Jones Industrials is close to an all-time high. Well, I think this is what would have happened, is it would have fallen lower if the Dow Jones was not propped up by the plunge protection team. A lot of these are highly correlated. You could see the BDI fell, and then eventually the Dow Jones fell behind it. Well, we fell in the BDI, but the Dow Jones hasn't fallen yet. Is it just lagged behind? Very well could be. Or are they trying to pump this thing a little bit higher for, we'll call it the presidential elections? And we're just kind of running out of steam now and ready to roll over. We'll see. Eric Yoon says, oh my God, the Japanese retail silver demand woke up. When is American retail silver demand going to wake up? Sold out everywhere in Japan. UNOBTAINIUM. That's where we're heading. You know what's going to happen? This is my guess, guys. This is my guess. They're going to suck all the gold out of the LBMA, which has already occurred. The LBMA is going to go on they're going to hunt for as much gold and silver that they can get their hands on to basically bring back and deliver on these contracts. It's going to hit retail next, and it's going to go on Obtainium at some point. HFI Research, natural gas storage is projected to hug the 2022 lows into the end of May, with structural demand increases coming at the end of this year and LNG gas exports already near 17 billion cubic feet per day. The market is going to incentivize more production. Let's see how producers respond. And here we are coming down We're getting close to that 2022 low here. And then we're below the 5-year average now. So natural gas storage, it's not as big as it used to be in terms of days of coverage. So as your days of coverage shrink, if you start to get cold weather, you really start to move the needle in a way that sucks through inventory. So we'll see how this turns and moves on up throughout the summer. But what I'll say is prices will have to go up to increase production. And that's exactly what we're seeing with natural gas. Here is the LNG gas exports making new all-time highs throughout the year. And that's because we've got some new LNG takeaway capacity coming on. This is more demand for natural gas, and we're just going to pile on the demand here. Pile on, baby. I've I've positioned for this exact situation that's coming up in natural gas a year or two ago. Because that's when beginning of 2024, 1 year ago, that's when natural gas was incredibly cheap. We could see it on a ratio perspective. That's where we purchased it on the website, and I'd gotten in my favorite companies. I'm sure a lot of you guys got your favorite companies that are also on the website, but that's where I entered, and a little bit before that as well. So I'm ready for this thing to go. The companies are breaking out of bases. They look fantastic. And I think we've got a long way to run. And I know some of you guys are contemplating, well, should I sell? Should I take profits? I'm up over 100% on some of the companies that we entered. What do I do? It's like, you know what? I'm not doing anything, guys. The money is made when this stuff, the fundamentals like this play out in our favor. And this is a 5 to 10 year play here, guys. This isn't a short-term market movement. So while we enjoy being well over 100% on some of the investments, if you purchased it towards the bottom of the bottom, you're up almost 200%. You're getting up there. But I think it will continue to run here, guys. We have to produce more natural gas. We have to get this back up for natural gas storage. As we go down here, so as we come back down here, this is going to be it's directly related to natural gas pricing. If we continue to go lower, we will get higher natural gas prices. Most crowded trades, Mag 7, US dollar, and crypto. And then the other, Long Russell 2000, those are, no one's over there. I prefer to be where everyone is not, especially where we are at in this cycle right now. I would not want to be long Magnificent 7. It's all overvalued over there. Same with the dollar. The dollar's overvalued. JC Parrott says this one's just built different. And we've got New York Stock Exchange Oil and Gas Index. We've got support resistance, and we are above support, and it looks like we could go higher here. Logan Matashami says exploding inventory here, and he's joking. It's real low. This is Nick Gurley's the Reventure Consulting guy. He's trying to put fear into everyone. Although this is probably an accurate amount of inventory in this area, the total area around it is still very low. Dave Kranzler says a shortage of gold that has nothing to do with tariffs. It's the fractional reserve gold bar system on the LBMA and COMEX that's imploding. Multiple paper claims on each bar. Top gold and silver dealer Bullion Star in Singapore sells out of 1 kilogram gold bars at spot. Warns selling at near spot may be viable going forward as the LBMA spot price is increasingly irrelevant. Now, again, I don't know how this is going to play out, guys, but I look at the paper price. I'm like, okay, so if we break physical away from the paper markets and they can't deliver, why have the paper markets then? The paper markets are going to they're going to implode. They're going to go down. So we're going to see a weird transition potentially where the price of gold and silver divert massively between the physical metal and the paper price. And then I don't know what happens if they can't deliver. Does that mean that the paper price will eventually collapse to zero because no one will want to trade on the paper exchange that doesn't have any metal to exchange? You get what I'm saying there. Warren Pye says housing. January housing starts, single families 82.5 and multifamilies 31,000. The bottom line here is this level of activity combined with the current backlog is not enough to sustain residential construction employment indefinitely. So we've got residential construction payrolls have been going up. And what could happen is if your housing starts roll over and your employment drops, that's generally the beginning of a recession. And that's why I'm going over this and watching. Their threshold here, this is the recession threshold, is this 850,000 area. So that's something to watch for a potential recession if we roll over and get down there. We're not there yet, and we haven't rolled over at all, but it could get there, and it's something we want to watch. Comex deliveries through the roof. Look at the deliveries here, guys. What the heck? We had a lot in 2020, and then now we are spiking back up again. Silver will be the GOAT, not gold. Mark my words, says Jamie. Says, I don't care much if gold gets revalued to 2,900, 5 grand, to 20,000, 40,000. The narrative alone supports the fact that gold is the ultimate investment for this decade. He's at 10% physical gold, 50% physical silver, 10% gold producer, and 75% basket of junior miners. I'm going to make one comment here. Not a lot of people know this. So, and there's a chart that I've got that I share with the members, but I don't share it here. But platinum to gold ratio in Weimar, Germany, under that hyperinflation, the ratio was 5.5 to 1. It took 5.5 ounces of gold to purchase 1 ounce of platinum. So platinum was 5.5 times as expensive as gold in that hyperinflation. Now, do I expect that to occur again? Maybe. I don't know. But I can tell you this, guys. Nobody owns platinum. No one. You go look anywhere, no one owns it. They have no idea about the history on it either. And I don't know if that was because it was a fluke. We have a 3-wave downward move in the ratio. And then we've got another 3-wave move in the downward ratio, not 3-wave, but I should say 3-hump consolidation in a falling wedge where platinum is falling in a falling wedge against silver and gold. I think it's possible that we could see a major breakout to the upside. So I have incorporated some platinum into my holdings. I have it silver, platinum, and gold are my main holdings that I have. And I would add the palladium too, just in case. I mean, if things go unobtainium, who knows what the pricing will be on some of these metals? I We're right at the beginning of problems, and if people start running at this stuff, who knows where it's going to eventually go? Freight futures AM update: dry bulk was up 3%, Panamax down 2, tankers were flat for VLCC, and Suezmax was down 1. The single greatest edge an investor can have is a long-term orientation, Seth Klarman. That's exactly what I have. I have looked at all these quotes. I've looked at the books. I've read things about these guys. I've read all their, like notes and stuff. I'm trying to adopt everything I can from the best investors in the world so I can be a part of that. So I'm adopting the Buffetts, the Mungers, the Lynches, Seth Klarman. There's other people too. I can't think of all their names, but I've read quite a bit, and there's a lot of similarities between them. It's the guys that make billions of dollars that don't blow up, and that's who I've studied. And they all have similar things in common. Giovanni says oil demand estimates IEA in million barrels per day over time. This is demand for 2025. That's where it is, way up there. What's going to happen is that we've had we had a big move in 2020 and 2021. Boom, it was huge. Went all the way up to 120. How did they stop the move? They released a whole bunch of strategic petroleum reserve barrels. They just flooded the market, mainly from the United States. Demand continues to go up. We have a pretty balanced market in 22, 23. We started running deficits in 24. We're running deficits in 25, eating through inventories. We're going to suck. We're going to push the price back to probably $90, $95 a barrel. We'll see if Saudi Arabia comes online with barrels. And then we're going to eat through the spare capacity that Saudi Arabia and OPEC has. Once that spare capacity is gone, I don't know what happens after that. Demand continues to go higher here. They could pull a recession card at that point, drive everything into a recession and kill demand. That is possible. But we've never been at the world's pumping capacity ever. Ever. So I think that when we test it, prices will go much higher. That also could be the reason that people are running into physical metals. Because if we have a problem in energy and oil, your interest rates will spike. When your interest rates spike, you're probably going to see currencies have problems. And if you have problems in currencies, your next safest bet below that is gold, silver, platinum, palladium, and the physical metals. And everyone's running to the physical metals before this potential outcome occurs, before oil starts moving on up. And this is oil here. So the cycle repeats. I do not have any holdings in these companies, only for show and tell. This is the cycle. I took this fractal here, overlaid it on the breakout. We've got the consolidation, the consolidation. We've broken out of the consolidation. And this is what I think is going to come. Now, I just took this fractal, overlaid it on this, and stretched it a little bit so that this stretch move matches the size of it. That's what's to come. If that comes, interest rates will go up, currencies will have problems, and I think that governments are reacting to potentially this coming. Because when this occurred, it's occurred 3 times in history. 1970, we hit peak oil in America. What happened to gold and silver? Massive move higher. Interest rates were up. And that was the beginning phase there. It was credit coming into the system from bank lending of the baby boomers buying homes. Oil was in a shortage or supply shortage for America, and things went ballistic for silver and gold. I think we've got the same setup here going on. We had a similar setup in 88 that broke out. We have another setup that's here that's going to break out again. So get ready for it. Get ready. And this is Chevron. Chevron's got the same pattern. Consolidation, consolidation. We've broken out of the consolidation. We're sitting on top of that consolidation here. We could potentially break out at some point. And that's going to be positive for gold and silver too. The physical metals. And this is the gold to oil ratio, oil to gold ratio. We'll see if oil can put something together here. We've got a shoulder, head, shoulder, where this generally falls lower. If you zoom in on the right-hand shoulder here, we are doing a retest move here. So we could see it roll over at some point. Maybe, perhaps, oil could outperform at some point. We also have the crude oil to gold ratio, which is in a falling wedge. So falling wedge with the 3-hump structure, breakout. Another move lower. And you can see we're still within that falling wedge, but we're starting to get some green candlesticks. We'll see if we can move on up or not. But oil is ridiculously cheap compared to history. And there's a lot of people running into gold. So what does that mean? It means that it's going to price commodities, and all these commodities are going to get priced higher, way higher, because gold's moving up. Just like when they repriced it in 1930s, we had a commodity bull market when they repriced gold. So if they reprice gold higher, oil will get repriced with it, and all the commodities will get repriced with it. Here's gasoline. So is building up energy within that tiny purple structure to have a good go at the overall larger golden fractal. This chart has it all when it comes to potential larger breakout in 2025. One hump, two hump, three hump consolidation, and now we're trying to break through everything and work our way on up. That's gasoline. Big move coming. Inflation's coming. And that also, remember, the interest rates being cut and the PMI, this is going to go right with it. It's all being released. That energy. Chinese equities are flashing a textbook trend reversal relative to developed markets. This is your currency exchange rate. You're going to see the yuan outperform the dollar and other currencies. This is all currency exchange rates. The LBMA situation right now is not a small hiccup. This is what David Jensen wrote in the latest article here. He wrote, the 7 major Western refineries for the LBMA have refining capacity of 160 million ounces per year. However, the majority of their forward gold production is spoken for well beforehand. 9 million ounces are down, 391 million ounces to go. Physical gold contracts standing for delivery at the LBMA. That's another 391 million ounces of physical gold that the LBMA has to figure out where they can acquire from within the next 60 days. I think this is going to put immense pressure on everything in the system. They're probably going to start sucking gold from all sorts of retail areas. They're going to eat it all up. Unobtainium, boys, unobtainium. Platinum chart, Mr. Renko says $1051, shocker, not really, is the ultimate level to get above. At that point, platinum is going to run and could be one of the best investments in the next few years. Totally agree with Casper. We could see a breakout here at any second. It says, Eric Yoon, in my opinion, this Arga Horea is telling the world that they're going to screw the small and medium-sized retail bullion dealers so that they can work for 24/7, 365 for the LBMA. It's all hands on deck for the LBMA with all cylinders firing to get this stuff, to get the gold and silver. Now, here's the problem. What if people keep standing for delivery? What if they continue to put the pressure on these guys? He says, this is Chuck, he says, our primary frontier of risk management isn't wide diversification, but the quality of the individual businesses, their balance sheets, and the people who run them. That is your risk management. Now, here's my question. What risk management do you have if you're just trading from technical analysis only? This guy's entire risk management is based off the business, their balance sheets, and the people who run them. That's a fundamental perspective. What I do is I try to marry the fundamentals and the technicals so I don't get caught in a fraud company. And that's where I'm going to end it, guys. So that's what I've got for today. Give me a thumb up for the content. Subscribe to the channel. Subscribe to the website. We'll see you guys Sunday at 5 p.m. Mountain Time if you're going to attend the Q&A this weekend. All right, guys. Catch you later.